Welcome, everybody, and thank you for joining us today for the meeting of New York City Health and Hospitals Audit Committee. Today's meeting is officially called to order. I would like to propose a motion to adopt the minutes of the Audit Committee meeting held on October 18, 2021. I will poll each member for his or her vote, starting with Dr. Pagan.
Yes.
Dr. Katz.
Yes.
Frida Wang.
Yes.
Penioski Peñamora. Oh, did he sign off for this too?
Looks like it.
Anita Kawatra?
Yes.
Thank you. So the motion is adopted. We are now going to have a presentation of the June 30th, 2021 management letter by Grant Thornton.
Great.
Tammy?
Yes, thank you. And good afternoon, everybody. I'm Tammy Radinsky. I'm the audit partner from Grant Thornton. Nice to see all of you again. I know we met back in October. We're here today to present the management recommendation letter, as you see, was issued just recently. Many of these comments, if not all of them, we talked through, but they haven't been formalized at our last audit committee meeting. So I will take you through them briefly. So as you may be aware, our audit includes the consideration of the internal control, but unlike a public company, we don't opine, we don't issue an opinion on the effectiveness of New York City Health and Hospitals' internal control system. There are 3 levels of control deficiencies that one can have or identify throughout our audit procedures. The lowest level is what's called a control deficiency, and the highest level is a material weakness. And you can see that, thank you very much, those definitions at the bottom. And really what a control deficiency says is that exists when there's design or operation of the control does not allow management in the normal course of business to prevent or detect misstatements in a timely manner. That's the lowest level. And we have some of those control deficiencies in the past we've identified, and we'll talk about them later. And the most significant is what's called a material weakness. And that's what either if you have a deficiency or a combination of deficiencies, so that there's a reasonable possibility that a material misstatement of the financial statements will not be prevented. And thankfully, the organization does not have any material weaknesses. But what we're going to talk about and really focus on today is the significant deficiencies, what I kind of call is the middle category. So those are not as severe as a material weakness, but they're still important and warrant the attention of the audit committee of the board. So the first significant deficiencies that I'll address today, I'll talk through it and Jay can comment from a management side, relates to the grants revenue. So I know we've spent a lot of time talking about, and in the past 2 years, especially in the June 30th, 2021 financial statements, the impact of the CARES Act and the funding that New York City Health and Hospitals has received. So as you're aware, there's the FEMA funding and the PRF funding. And initially when Grant Thornton came in to do their audit procedures, we were provided a financial model. And that model is used to determine the applicable COVID-related expenses that are not funded or reimbursed by another source, because obviously you can't double dip into your reimbursement. And this model contained allocations and assumptions, and there was not what I would call readily available audit support or documentation. And just as importantly, this model did not reconcile to the 2021 operating results of the financial statements. And that caused a delay in the receipt of information that as external auditors for our audit purpose and doing our procedures that we need to support the revenue that was booked or recorded in the financial statements. So what we're recommending is that management perform an analysis on a periodic basis, preferably quarterly, that includes the appropriate documentation, but most importantly, reconciles to the operating results as disclosed in the financial statements. And we've talked with management how to improve this process and what management steps are to improve the process going forward.
Jay Wyman, Public Controller, just a couple of comments on this recommendation. We have 2 components to COVID costs. One is discreetly identified. It was audited, wasn't an issue, and so what Tammy is talking about is the allocated cost, and in context of the financial statements. And, we agree that we have room to grow in getting a better process, so that when we look at allocated costs in connection with the, with the discretely identified cause, that it makes sense in the bottom line. And because it was all happening during the audit, it delayed part of the audit steps. And so we agree that we should have that beforehand, have that reconciliation and ensure that we have, good data going forward for presenting it to the financial statement.
Any
Thank you.
questions?
Are there any
Sally, do you
questions?
want questions at the end or?
Yes. Why
Now?
don't we take questions as we go? Yeah.
Yes.
Okay. So thank you, and that was a helpful explanation. So I guess my understanding then, Jay and Tammy, from what you're saying, is this really was a reconciliation issue with the financial statements and not necessarily a tracking of the expenses being inappropriate or anything like that, or misidentified. Is that a fair statement?
There are two components, discretely identified cause. We have a great process in place, to track them, identify them, and in turn, have Grant Thornton audited. So that was good. The allocated costs are part of our baseline costs, and identifying them is more difficult.
I see.
And we have models that identify them, and they're large amounts. So, to come up with a number and then, backtrack to ensure what you calculated made sense was where we got hung up during the audit. But in the end, we came up with with a fair methodology. It made sense in terms of context of the financial statement, and Grant Thornton was able to audit it.
And then in terms of identifying those allocated costs, how does that, I think this may be more of a FEMA question than perhaps the PRF funds, but is there any risk in terms of, what we submitted as expenses that was, approved by FEMA, that there would be some clawback, or it wasn't properly allocated or some such thing?
Yeah, these costs were almost entirely attributable to PRF funds and not FEMA. All FEMA was, all the requirements that we have identified, discretely identified costs. So those costs are, we shouldn't have any problem with FEMA. For PRF, they give you the ability to allocate costs. We took the liberty to based on the rules, to allocate costs. And so we were able to allocate it to that.
Okay. And is there because we got the PRF funds in advance, right? So there isn't.
Yeah.
Do they do kind of an audit afterwards, or how do they track the?
Yeah, potentially they can do an audit.
Right. Okay. But the fact that we had this now reconciled for our audit is a good thing.
Yes.
Okay, great. And going forward, as you mentioned, Jay, it'll be a more. The plan is, I think you mentioned sort of a quarterly analysis and more timely.
Right.
Okay,
Yes.
thank you. That's very helpful.
Perfect.
Are there any other questions? Okay, now Tammy. You wanna talk?
Okay, so next one, a little bit more straightforward and simple. Management came to Grant Thornton when we came in to do our year-end audit procedures, and what we noted is that there were purchases and usage, inventory purchases and usages throughout the year that were not accounted for on a timely basis, and this resulted in a material adjustment at year-end. Management identified the adjustment, but what we recommended is improve the control process to ensure that this activity is accurately reflected on a monthly basis, so you don't have this large adjustment that needs to be reconciled at year end. So I know management, I think, is working on that process to be completed during the next fiscal year.
Jay,
Okay.
do you want to say anything?
Okay, sorry.
So this is, I guess, Jay, you didn't mention a response, but I see here the written response. And so, Tammy, the question really was for you, is this you hadn't noted this as a deficiency in prior audit, correct? So
No. So, this stems from not reconciling the inventory on a regular basis. So if there are errors on the accounting side, we recognize that we made the adjustments, right? So, for the financial statement, it was properly reported.
Mhm.
But the process of getting the inventory right could be improved. And that's what Grant Thornton is recommending, is that we have a better process so we don't have to make these adjustments at year end. And so we would make them monthly instead of one big one at the end, and have the process from the supply chain to, to look at inventory and reconcile it on a regular basis, which supply chain agrees to.
Okay, great, thank you.
Okay.
Okay, so those are what we call our significant deficiencies. The good news here is that's the only control deficiencies that are identified, and they are both in the significant deficiency category that were new this year. The next section talks about the status of prior year findings. So what you see here, the first one relates to information technology. And we had a finding actually that dated back to 2019 that the recommendation relating to the user access review was that we recommended a formal periodic review of the network, PeopleSoft, Udity, Sorian, and Epic user entitlements to ensure the access changes were conducted in accordance with management's expectations. The good news here is that if you turn to the next page, that during our audit procedures as it relates to the information technology audit, we obtained the appropriate evidence, and this comment has been closed. So that's good news. We've been working with management since 2019, and that this comment has been resolved as of the current year.
Questions?
Great, thumbs up. Okay. The next comment is we're making progress on it, but this relates to the credit balances in the patient account receivable and net patient revenue balance. So this also is a comment I would call a carry forward from 2018. And each year, this is kind of, I would say we're reporting on the progress that has been made. So for 2021, the credit balances decreased, but they still exist. And these credit balances, the good news is that they do not, there's a smaller portion, I would say the immaterial portion relates to the liabilities due to patients and payers, but the majority is related to billing adjustments. So what we're recommending is, although the balances decreased from the prior years, management needs to still do a complete review to determine the proper accounting treatment for these credit balances, because they still do exist. So understanding the root cause a little bit better and ensure that these credit balances are being reduced every single year.
So just a couple of comments on this recommendation. So we know that credit balances are problematic because as they exist, they're actually negative accounts receivable. Right? And negative accounts receivable is counterintuitive. It doesn't make sense. You shouldn't really have these. And why do they exist? They exist because the payments are higher than the expected reimbursement on the bill. And so you end up with this apparent payback that looks like a negative AR or a payable. In Brent Thornton's test and our internal test, these are not really payables. They're incorrect adjustments, right? So the expected reimbursement, they say 100, and we get paid 120. It's going to leave a $20 credit balance. Somebody has to go and write that off. If the 120 is the right payment, somebody has to write off that difference. About 75% of these credit balances are on our legacy systems. They've always existed, and they probably go back, decades. So, it is difficult to get those off. Somebody has to close them. But again, in our test, they weren't owed back. So, we do have to close them. On the Epic system, we're much better. Right, so as we get the actual expected reimbursement into the system, and we get paid the expected reimbursement, we would have no adjustments, no credit balances. So, revenue is looking at better and better processes, trying to get the rates established within the system to minimize the impact of those credit balances. And that's the process, and it's an ongoing process. And and when we finally clean up the legacy systems, we'll see credit balances.
So is there oh, go ahead.
No, you go, Sally. Go
Is there a time horizon in which you think that you'll be able to clear the balances, or just keep working at it?
You want to?
Sure. So I'm Margie Carlin, Chief Revenue Officer. I don't know that we have exactly laid out the exact timeline for doing this, but we have I will say, a more developed project plan to address the legacy systems than we have at any other point in the last couple of years that we've been looking at this. We have laid out, it's an analytical approach to make sure that we don't write down a credit balance that is in fact a liability. But it is in fact an analytical approach. And so as recently as yesterday, we had a conversation with all the patient account directors at each of the facilities, understand, now that we have the project plan, understanding what resources we need to actually accomplish this. Since, as Jay pointed out, these are mostly on our legacy platforms. And we are, we have some resource challenges in working on those legacy platforms.
And so what's the balance we're looking at now? The credit balance?
It's thousands of accounts. I don't know the dollar amount,
Yeah, I
but
forget.
it's thousands of accounts.
Okay.
So it's impossible to look at them on a case by case basis.
Yeah, and I do want to add that, the fact that this is a very high balance on the credit balances does not affect the valuation that we put onto the financial statement. Our method includes the fact that we have credit balances. Our testing includes that, grant thoughts testing includes that. So it doesn't really impact the financial statements, but it is a process-oriented recommendation that they're making.
And that's why it's a control deficiency and not anything of more significance.
Rita, you,
So I think, Margie, you answered in terms of how much is thousands of accounts. Do you have a magnitude of dollars or not?
I really don't.
Don't know. Okay. And those, go ahead.
I know the Epic is about 70 million or
So
so,
I think it's about 80.
80 million,
Yeah.
something like that.
80 million.
On the Epic side, yeah. So I know that that's about that.
So on the Epic side would mean, Jay, that that's not really a legacy. That's kind of going forward. Since we shifted to Epic, that we're still generating credit balances. Is that?
Yeah, I couldn't tell you, we've implemented Epic over the last couple of years. A lot of the credits happened at the beginning of the implementation, so I couldn't really tell you how much we've added over the last, year or two. But we started off, as you start getting better rates in the system, you get, fewer credit balances. And we did have an issue when we first went up. So same issue as legacy, trying to go back and trying to clean those up. But I think we are getting better at the credits going forward.
Okay. So to the recommendation of sort of identifying the root cause, Margie and Jay, do you feel like you have a good process in place to figure out why it's happening and one thing is to reconcile the old ones, right? And then just kind of keep it from growing and going forward.
Right, and so the root causes, or as Jay alluded to, is how the contracts are reflected in the system. And if the expected allowed amount matches what we're getting paid, and what we should be getting paid. And we have a much better process now it's a payment integrity process, reviewing the payment amounts, ensuring that they're the accurate amounts, and then adjusting the contract bills in the system to reflect that. For the first, couple of years of the Epic Go Live, while we had that process in place, it wasn't quite as robust as it is now. And we are really catching things in real time in order to make sure that we're adjusting these accounts appropriately.
Okay.
So right now, it's just a pretty large scale cleanup effort to go backwards.
Understood. Okay, thank you.
Okay. Tammy, are we?
That's all we
That's
had
it?
as part of, yep, so.
Okay, perfect. Thank you so much, and thank you, Jay. We are now going to have an audit update from Catherine Patros.
Good afternoon, Catherine Patsos, Chief Public Compliance Officer. I'm going to first give an update on internal audits. With regard to external audits, we still have the New York City Controller's Office audit of our controls over nursing homes, which began in August of 2020. I had reached out to the Controller's Office to get a status update on where they are with this audit. I was informed that they were finalizing the field work stage and they're moving into the writing stage of the audit. And also since our last meeting, the Comptroller's Office has requested several other items, pieces of information, including PPE supply for 60 days, the purchasing and usage of protective gowns, training material, policies on useful life, counting event details, such as items counted and adjustments done as a result of the previous physical inventory. The next external audit is also from New York City Comptroller's Office, and that's with regard to its prior audit over our oversight of auxiliaries. Dr. Katz had received a letter in August of 2021 requesting a status report on implementing the recommendations of their audit of our oversight of auxiliaries. We responded to that on November 15th. The next page referring to our internal audits. Internal audits will be conducting a system-wide review of nurse hiring. We had an entrance conference on November 29th and the field work has begun. The objective of the audit is to evaluate the onboarding of nurses that are either direct hires, agency nurses, or travel nurses. We want to verify the proper background check and that they have their licenses are verified. Ensure the annual performance evaluation for the direct hires and agency nurses, and make sure that we have proper documentation is maintained for and reviewed by the relevant parties. In addition, there has been some ancillary, there will be planning for auxiliary dissolutions for the Friends of North Central Bronx Hospital Auxiliary and Seaview Hospital and Home Auxiliary. The proceedings are being conducted, we've engaged Kathy Roseman to assist with these dissolutions. And also for with regard to auxiliary audits, we have the outside CPA formed by the DO group, which is reviewing the audits of conducting the financial statements for the auxiliaries, and they have done 17 of 22 auxiliaries, 15 were compilations, 2 were reviews, and those were, the compilations are for below $250,000 and reviews are between $250,000 and $750,000. There are 5 reports that are still outstanding for 2020. For 2018 and 2019 each, there's 1 report for Queens Hospital Center Auxiliary that is outstanding. And on the last page is a summary of the reports, the financial statements that have been conducted. Are there any questions?
I have just a question. This is really just your thoughts on the controller's audit. What end do they have in mind for the nursing home audit they're doing? Is it that we're not using things appropriately or not?
It's actually a little unclear because they seem to be asking for a lot of information that we didn't expect them to be asking for in based on the entrance conference.
Okay.
So they continue, even though they had told me that they were finishing up the field work, they're still doing more, asking for more pieces of information.
Interesting. Okay, thank you. Rita, did you have any questions? Anita? I guess that's everybody. And now we're gonna
The
have a
compliance,
compliance
officer for
update now.
compliance,
from
yes.
Catherine, yes.
So starting page 2 of the report with the exclusion and sanction screenings for the period of October 1 through November 16th. We had 2 workforce members who appeared on the exclusion list and 1 whose license was temporarily suspended. The physician's license who was temporarily suspended was a PAGNY physician. He was terminated on June 21st, 2021. His last day that he worked for the system was June 18. He was, the suspension was effective, no, it's not effective until September 24th. We also learned that an agency workforce member that was part of our COVID-19 Take Care team was excluded by the Office of Medicaid Inspector General and the Office of Inspector General, and as well as appearing on the General Services Administration System of Award Management, or the SAM list. This individual has, this was effective as of September 19th, and this person worked from September 15th through October 12th, when they were terminated at that point. And we are determining whether any whether there's an impact on any overpayment that may have occurred. On the next page, we have the another agency workforce member who was a part-time position as a service aide, Harlem. This person appeared on the SAM list. He was taken off duty on October 29th, and we are also evaluating whether any overpayment occurred. There were no providers on the Death Master file or National Plan and Provider Enumeration System screenings.
Could I
Moving on to
ask a
page-
question, Catherine?
Yeah, I'm sorry, sure.
On the exclusions, how do you learn about those? Is it just a periodic?
Oh,
There's a,
no, monthly, we screen everyone, including our vendors, our affiliates, our agency staff, everyone, through our vendor OIG Compliance Now, and they run our lists against all of the exclusion databases, and we do a large number of them. We don't just do New York State, we do several states,
I see,
as well as the federal lists, and that's done monthly.
okay.
It's also done upon hire.
It's, upon hire. Well, that was the
Upon
question I
hire.
was gonna ask, because, a couple of these, it seems that, they were
Yeah.
hired, they quickly got caught in what seems like the next screen, but I was gonna ask if you screen upon.
Right, and then the agency ones, they're supposed to be screening them before they send them to us, so
I see,
that's why you see some that were come up, that may
I
have come
see.
up almost immediately, is they were supposed to have been screened by the agency.
I see. So it's like 5 and 6 were both agency people.
Right.
And so then is there anything that you do in terms of talking to the agency about why their screening isn't catching them? before?
Yes, we go back to the agency and, and talk to them and let them know that these people came up on our exclusion list, and why were they sent to us to begin with?
Right. And I mean, I guess the bigger question is, are you sort of tracking that so that when we have continual lapses like this from the agencies, that we're dealing with that agency and not, using them?
Yeah, I mean,
for something.
there's one agency really that we're dealing with, so it's the
Same.
main agency, yeah.
So is there a kind of track record that's developed, or is this just common? I mean, it's not that many, right? It's 2 people, but.
Right, and that we have, we are, beginning to track those because they have come up a couple of times.
Right.
Not just in this report.
Right. Okay. Thank you.
Mhm.
I think that would be good. I mean, obviously, to try to get these down to 0 would be great.
Yes.
Catherine, it is possible though that when you do when the agency does its screening, information comes in post their screening.
Post their
Some of these
screening,
people have
right.
multiple jobs at any given time, or like something isn't reported until after that
Mhm.
screening like that. You
Yeah.
should expect that there would always be the possibility of some,
True. That's true.
Right.
Yeah.
Those all
even if
be,
they're
like,
doing a
people
very
who
thorough
were-
job. Yeah.
Right. They were all, those were all people who'd been on exclusion lists from a long, long time ago. I don't know if that.
Oh,
Yeah.
makes a difference or not.
Yeah.
Sorry, what was that?
Nothing, no.
Oh, okay.
Moving on to page 4 with the breaches, we had 21 incidents that we entered into our management system. 20 of those, 2 were found after investigation to be violations of our policies and procedures. 5 were not violations, and 14 are still under investigation. Of the 2 that were confirmed as violations, both of them were determined to be breaches. One involved inappropriate disclosure of PHI by our record release vendor to the wrong recipient. The second involved a resident who misplaced documents that had PHI for 3 patients while in transit from one facility to another. We received one letter from the Office for Civil Rights. This was actually a good letter because it involved an incident that occurred in March 2011 that they had been investigating with regard to an unauthorized disclosure by a surgeon at Jacobi. The OIC concluded that based on the corrective action that we had taken and the additional security controls that we've implemented, as well as our recent submission of our enterprise-wide HIPAA risk analysis and risk management plan, that they were able to close this review effective October 15th. For the compliance reports, any questions on the breaches of the OCR letter?
Yeah.
Okay. Compliance reports, we received 40 in this, since the last audit committee meeting. One was a red report, which is the most severe, then 21 yellow and 18 green, which are the least severe. The red report concerned patient abuse. However, this report was made anonymously, and the reporter discontinued the call before we were able to obtain any information from the reporter. And the reporter was, and they discontinued the call before the vendor was able to give them a case number to follow up with. Moving on to page 8. As we know, we had revised our principles of professional conduct. And just as an update, it was, the changes to the POPC were approved by the Board of Directors on October 28th. And we will be, it has been posted both on our internal website and our external website, and we will be educating people on the changes. I've been meeting with CEOs of all the facilities and alerting them that these are the changes that have been made. The Office of Corporate Compliance is revising our OP 50-1, which is the Corporate Compliance and Ethics Program. This OP contains the core components of our compliance program, as well as the workforce members and business partners' responsibilities and the prohibited acts in the compliance program and the responsibilities of the OCC. We are also working as a subcommittee of the Records Management Governance Committee to update our OP 120-19, which is our Corporate Records Management Program. We will be presenting a draft of this to the Records Management Governance Committee at their next meeting. One of the key features of this new operating procedure is that the schedule of record retention will be searchable, to make it easier for individuals to determine how long their records need to be, a specific record needs to be kept. Finally, as you know, we have been working on a HIPAA risk analysis and security assessment with our vendor Coalfire. Turning to page 10, they're currently finalizing the last reports and workbooks. This is the final phase of their review. They will be presenting all of their results to system leadership in January 2022. And finally, we are in the process of choosing a new vendor because Coalfire's contract expires at the end of February. And so we have now 2 vendors that made presentations to the evaluation committee, and we hope to secure a vendor by the end of this year. Any questions?
I just had a question on the compliance reports. I have
Sure.
a memory, I think I just have a memory. Obviously, the red ones are the ones that we give immediate attention to. And for some reason, I thought that we weren't staffed, didn't have enough staff to look at, I don't remember if it was civil rights or the compliance reports. Because do we look at the yellow as well?
We look at all of them. We look at every single one.
Everyone is.
Everyone gets recorded in our management database.
Right.
And we do receive several reports that are not really compliance reports. They're HR or labor relations.
Right.
So we gather information and then refer it to the appropriate department to handle if it doesn't involve a compliance issue.
Okay. All right, thank you.
And we follow up with them to close the loop on those incidents.
Okay. So Frida, Anita, any questions? We're
No other
making up for
questions,
lost
thank you.
time.
We're almost right on schedule.
Okay, is there any old business, any new business? If not, the meeting is adjourned.
Thank you, Sally.
Great,
Thank you, Nick.
thank you.
Thanks,
Bye-bye.
Thanks,
Bye-bye.
Alicia.
Thank you, nice to see all of you.